So it looks like I am recording now. All right. So yeah, I mean today's topic is pretty much just entirely focused around DeFi. I'm gonna go over the lending sites, kind of the differences between them, why I would use one over the other. Also gonna go over kind of how to set up the pools. So a lot of you guys have been playing with the Meteora pools, DLM pools on Sol. There is value in these things to me. Again, it's just important to kind of understand what it is you're doing with it. Also mentioned this in the event notes before, but quick little side note. If you guys do find the content that we put out here useful, just use the Blowfin links from either your partner or us. I mean, I think it's a pretty reasonable ask. We don't charge for any of the content that I do make. Again, I'm not perfect, so some of it's not great, some of it's good, but I do my best. And it is the only way to keep the rewards and all that stuff going. So the support on that front is definitely appreciated. Okay, cool. So the first site we're going to go over is going to just be the basic one. So I think you guys can see my screen. Cool. Let me know if you guys can see this. Awesome. Okay. So this is kind of the first site. It's kind of the basic DeFi site I think most people have heard of. And this would just be Drift. And the reason why I want to look at this one first is this is kind of a base skeleton of what the other sites are going to look like, right? So for lending, I mean, this is pretty straightforward. We're just going to go to our earn, and we'll see lend and borrow over here, right? And the way that this works is the same as it works on every other protocol, right? Where you have some sort of lending APY, right? A higher borrow APY. And generally speaking, and this is kind of the rule of thumb, is the more liquidity these protocols have, the lower the rates are going to be, right? So with Drift especially, right, this is an extremely, extremely big protocol, right? And if you notice, right, $277 million, right, $8.9 million, these rates are quite low, right? 5.8%, 7.1%. And this is kind of the overall theme you're going to observe is the more liquidity in these protocols that you have, the higher the rates that you're going to see, right? And we can keep going down through all this, right? 8% on USDT, right? Almost zero on Jupe or JLP over here. And again, a very, very close borrowing rate to what these things actually cost. So this is kind of the basic format for how these sites look like. Now, I'm going to show you guys my personal preferred site as opposed to something like this, right? And again, this would be another ripoff of something like this. So this would be Camino, right? What is Camino? Again, another site where you can make pools, but we're not going to get into that quite yet. We're only interested in the borrow and lend functionality for now. And again, you guys can see this is a pretty big market, but much smaller than this guy, right? So we've got about $93 million of deposits there, and only about 229 million of deposits here, right? And this gives us a significantly higher supply APY, right? So again, this formula is generally going to stay true. The higher amount of supply that we have on borrowed, right, these utilization rates as well are going to kind of up the borrow rate. So when you have utilization rates of, 90%, as more and more of the loan SOL is used, the actual price or the lending rate is going to go up. So as opposed to trying to figure out between these two sites which has the highest rate for super, super safe stablecoin investments that you want to kind of have higher liquidity, I would go to this site over here called Lulo. This is just going to be one example of these sites. And this will pretty much let you loan anything out, right? So you can use USDC, USDS, PYUSD, and it's going to automatically sort these rates for you, right? So all these rates up here are going to be auto-aggregated based on the highest rate. So if we go to our USDT example, right, you can see that Drift APY is only 8.5%. So we'd be better off putting our money into Solend, right? So that makes a lot of sense to simply put it into these. And if you look, this is actually offering very few protocols, maybe 4 or 5. And the main reason behind that is that these are the most liquid protocols, right? So if you're putting money into Lulo, understand that you're not going to necessarily get the highest interest rate overall, but you will get the most safe lending project, right? Because this is only going to use Camino or JLP, or sorry, Camino or Drift or Solend. And all of these are hundreds of millions, if not billions of dollars in TVL. But, right, and again, this is kind of where it gets more interesting. As you go to stuff like NX Finance, this is quite a bit smaller, right? Our total value locked is only 18 million. But, again, and kind of finding these protocols that are smaller and safer are generally how you are going to make the most yield and APY. Oh, and the other big thing I want to mention with this is that if you look at rewards, so, and this is kind of the important thing. No, Lulo does not charge any fees. You would not be paying a higher fee to leave it in Lulo. But the big thing with this, again, is that you're actually going to earn these airdrop points even if you are sorting between all of these, right? So it's going to automatically move these to the highest rate, and you will also collect the points. This is a big thing to me for two reasons. Number one, even if I did want to get the highest rate all the time, right, and I just believe that that rate would be on Drift, I wouldn't get all the points from Camino. So the fact that you're automatically kind of sorting between them so much is really good to me, just because of the fact you have maximum exposure to all these different kinds of points. And eventually you'll be able to claim these points for an airdrop from the initial sites. People asked me, I think, earlier in the week why I think a fractionalized NFT of pools is really stupid. This is the fundamental reason, right? Because you can do all this already for free. This takes no fees at all. 100%. No fees from the actual APY rates and no fees from the points. So if you're doing this in a collateralized format, they have to charge you a fee, and you're pretty much just wasting your money for no purpose. So again, I've seen a couple new projects kind of talk about this, where you're sort of going to make a collective revenue share of stable coins and then distribute it back and give all the points away and whatever. There is no point, because you could just do it yourself on this. Now, going back to something like NX Finance. So the benefit with these, again, is pretty obvious, right? Well, you are taking smaller pool sizes, which does increase your risk. Yes, it automatically will switch it. It's not manual. So when you go to something like this on NX Finance, this is not included in the Lulo page, right? Maybe it will be eventually, but it would not be included quite yet. And the reason why is because, again, the total TVL of something like this is much, much smaller. And again, going back to the idea of collateralized sort of, what's it called, of ownership of these things, it doesn't make sense, because if you supply your own money, right, you're just going to get this team boost anyway. So again, no matter how you divide this up, if you're putting money into a split pool and you're, doing all this APY splitting, the fee has to come from somewhere, and there's no management of this, so you're not paying anyone to do anything. It's not the same thing as paying a pool provider to actually maintain the ratio of the pools. When I look at this, there is no benefit to having someone manage this for you, so you are much better off doing it yourself. And again, as you guys will notice, the rates on here are significantly higher, right, than the rates on here. And that is, again, because you're having an $8.9 million pool as opposed to a $500 million pool. So kind of balancing out the risk of small pools versus big APY is kind of the name of the game. But personally, I would trust this site, so that is why I do promote it. I would be very careful exploring the internet to find other pools with higher APY, because you are running the risk of simply getting rugged. So that's generally not fun. But for me, to be honest, I do think that this protocol is probably more than safe. And again, I have no issue sticking some funds here for 16%, combined with the fact that you are getting those airdrop points, right? And again, maximum exposure to those airdrops is kind of the name of the game here. There really is no reason to go into the overly risky side of these things. But if you so choose to, you are more than welcome to. All right, I will give Bombaclad a second here to type out his question. No, like, I didn't speak to NX team directly. What do you mean by this? Sorry. I don't have personal relationships with any of these sites, if that's what you're asking. Yeah. Okay, so again, the biggest reason that I would promote this site is a couple reasons. One, I've been using this site for a long time. And two, the other big reason is kind of this. The person who is ranked on this leaderboard up here is actually in our Discord server. So they are one of the biggest providers on this protocol. And while they do have issues with it, security / getting rugged is not one of them. I imagine they're putting probably 6-7 figures at least to be in this list. And they're not a stupid person. So to be honest, that's kind of the case where I'm deferring to somebody else. But I don't really see too much of an issue with a protocol like this, just given length of time. That being said, on the airdrop front, do I expect the airdrop to be incredible? Probably not. I think it could be mid. I wouldn't be surprised. But I do think the fact we have a team will help offset that by at least the 10%. And again, yeah, I just don't think the guys I know using this are morons. That's just the reality of it. And I mean the 10% boost in this case. So I want to move a little bit off of pools. Sorry, a little bit off of this stuff. And I'll kind of show you guys these different pools, right? And we can look at these carefully. So to me, don't touch this. Like right off the bat, this is not the kind of pool I would touch. When you have these kind of breakdowns like this, it's really, really hard to understand what it is you're actually doing, right? I really don't know what these sliders mean. I don't know what the health factor means. None of this makes any sense to me, right? And there is, and again, I'm also going to pay this performance fee on profit of 15%. And I have to ask myself, why am I paying a performance fee, right, if they're just doing nothing and I'm the one setting up the pool? So would I use this site for pools? Probably not. Just doesn't make a lot of sense. So if I were to go look at pools, let's take our first look at a pool that does make sense, right, with a performance fee. So I'm going to go into JLP over here at neutral trade, and we'll look at this strategy. This is the one I like to use the most. And the key thing I want to highlight here is the details of it, right? So this is a leverage strategy that aims to earn fees from trading, borrowing, whatever, right? And it's based on fees. So again, the big thing here is that it's not really based on the price action. Whenever you're trading a vault with JLP, and this is why I tend to use JLP the most, is that you are benefiting from transaction fees, borrowing fees, and liquidation fees. So there's no other asset, at least that I know on the planet, that works the same way, unless you're talking about some internal asset that another company produced. But there's really nothing trading that is actually funded purely on fees. And for me, that is a big kind of incentive, as I'm pretty sure the price of this will just slowly go up over time, regardless of how crypto does. And the other big thing with this is that it's delta neutral. And what does that mean? It pretty much means that your borrowing ratio of USDC and JLP is pretty much neutral. And essentially, regardless of which direction the price goes, you'll make money in either way, as long as that price does return to some sort of equilibrium. And the way that these pools work, for the most part, is very, very similar. They're all the same. So you're pretty much, and I'll use a different site to kind of go over how these things work. So let's go to a pool here of, we'll do this, we'll make our own, we'll do another JLP pool here, right? And I want you guys to look at these little guys here, these ranges, okay? So we got 4.867, we'll do an asset that you guys actually know, just make it easier. Let's do, is there like a USDF one? No. Okay. Sure, Sol USDT, this works. Okay, so you guys can see that we have a range here, right? Of, oh wait, I don't want USDT, I want USDC. Sorry. Okay, so this is our range, and with this there is no performance fee, which makes sense because we are effectively doing the exact same thing that we would be doing on NX. And again, we're the ones making this configuration, so let's just take a look at what happens. So in this hypothetical scenario, let's say we want to put in, and we'll make this pool together actually. So if we don't put any SOL, right, we have no leverage, we are 100% cash. Right, I feel like this makes sense because, again, we're not borrowing any SOL because we have no leverage. So I want you guys to stop me when you guys have questions because this will get a bit confusing. So let's just slowly add some leverage. And what leverage is going to do is just multiply our gains in either direction. I think you guys understand that at base level. But the first thing I want to show you guys is these ranges, right? So if we look, and this is the way that all these pools work, is let's say I make this range super small. Right, 259.9 to 261 point whatever. Okay, that did not work very well, clearly. Okay, we'll put this back in the middle here. And let's set our leverage up to 2. Cool. All right, now we got this to actually look properly. So for the most part, guys, the way these things work is that between these two prices, you're going to take opposite positions, right? So if the price is closer to 259.9, you are going to start to take longs in here. And as the price gets to 264.2, you are going to take shorts within here, right? If the price is to fall outside of these two ranges over here, you're going to stop collecting fees, okay? So just keep in mind with the way this is being set up, especially as a delta neutral, which I haven't done yet, as long as the price is outside of the range, you won't make money, but you also won't lose money, right? So essentially, right, if you're not leveraged in one direction, as long as this falls out, sure, you'll take a loss on that trade, but you won't actually re-enter this thing until you are back inside of this range. So if we start to kind of decrease the range, notice how our yield begins to fall off as well, right? So as I'm pushing this midpoint closer and closer and closer to one side, right, our yield is dropping more and more and more. And similarly, if I make this range super wide, let's say, right, 220 to 270, my yield is pretty much virtually zero, right? And even as I try to push this kind of back towards the middle, it will take a very, very long time. But, again, let's take a look at how this changes as we move this. So right now we are semi-long, right? And let's see how that kind of works. Well, we see that our midpoint is actually way closer to the bullish side of this equation, right? If our range is 220 to 265, and this 262 is our midpoint, clearly we are very, very long biased, right? But what happens as we start to move this over? Well, we're starting to get less and less long, right? And people might start going to ask, kind of why? Well, because this percentage of borrowed USD is going to get higher and higher. So if we put this leverage low, right? If you look what happens, we're borrowing a ton of SOL, right? Borrowed SOL here, equal amount there. And we've got this huge amount of base USD already, right? But as our leverage increases, right, we have way less of our initial capital over here and much more of this borrowed capital over here, right? And these aren't quite equal because these two together still outweigh this, right? Once we let's say we get this all the way up to here, right? Are we almost delta neutral? No. So how do we get this thing closer to delta neutral, right? We can begin to move this way, right? So now you'll see that these kind of midpoints are beginning to adjust themselves. So these are our liquidation prices. I wouldn't focus too much on this as you're just not going to get liquidated. But what I would focus on is kind of the way that they're moving, right? So as I go closer to the right side, I'm pushing my liquidation price much, much closer to the current price and much, much lower here. So I'm essentially betting on the price going down, right? And as I borrow more and more SOL, right, you guys can see that this is getting extremely, extremely short because we're borrowing more and more Solana here, and all these positions are always hedged against themselves. So when you're setting these up yourself, let's take a look at a couple of things to keep in mind. Number one, you don't want this, just as a very clear starting point. Don't set this up. You will get wrecked. I really would not set any pool anywhere close to a bias like this. So the first thing I would do is I'd really keep my leverage between 3 and 4 at the very, very max. And the reason is because you want to have pretty much unrealistic liquidation prices, right? And the other thing I would do is number 2, I don't want to have my borrow ratio at 95% and only 6%, right? Because even though I'm using 100% USD, with the amount of SOL that I'm borrowing times 3x leverage, I'm actually betting on the price going down. And again, even though it will trade in between those ranges, the range is biased towards the downside, right? There's very little room for this to go up, where it can still trade, and there's much more room for it to go down where it can trade. And this is essentially what this is doing all the time, right? So I don't know how good of an explanation I just gave is. I don't think it was that great. But essentially, this is somebody else maintaining these ratios for you in order to keep it at an always delta neutral rate of 0.5, right? And how are they doing that? They're slowly adjusting these price ranges, they're slowly adjusting the leverage, and they're just working to kind of keep the balance of those two factors the same. Now, as you guys can probably imagine, right, if we, get this to a delta neutral point over here, and this is not at all what I want. I don't want a 263 max. I want probably like a 270 max. And because again, as we make these ranges bigger, right, we get less yield, right? So this is a very reasonable range to me. You've got 262 here and 12 bucks on either direction. And the minute it falls out of the range, it'll stop generating yield. So this is kind of the basic way to think about it, right? If you have a super small range, it won't be able to trade as often because the price is going to be in that range way less. If you have a super big range, right, let's say these two, well, you might get more trades because your just likelihood of going to either side is way lower. Your yield is going to drop because you need more volatility to create price. So the basic way, again, I would think about this thing is that every time you are on this side of the field, on the left, right, you are going to generate yield. And every time you hit this middle point, you are going to sell, right? So you're going to long on this side, sell in the middle here to break even, right? And then as you get closer to this side, you will start shorting till it comes back to here. And it's just going to kind of go back and forth, right? So again, the obvious risk is that if you're not delta neutral, right, these liquidation prices are going to move kind of towards they don't move at the same pace, sorry. You'll notice this is getting much, much closer to our range high. So would I keep it like this? No. My suggestion would be balance this out to get an exact delta neutral at 0.5 or 0.51. You know, you can put a bit of bias in there, right? If I'm bullish on Solana, there's nothing wrong with me putting it at like 0.57, right? Very, very small long bias, because I probably don't think that Solana goes to negative 10%, but I do think that it can go to 260 or whatever, right? So you got to kind of think about how you're going to use these, right? In a super, super volatile market, something like this is just not going to do anything, right? Let's try a bit bigger. Sorry, guys. 270 up there, right? This gets you a much bigger yield with a range like this. And again, as I make this bigger, my yield is going to drop off more and more. So in a super volatile environment, this might not be very good, right? Because the odds of the price staying in this range are very, very low, right? This is only like a $10 range. So will this thing trade that often? Probably not. So I'd probably make less money on something like this as opposed to a much broader range like this, where it's more likely to stay active 24/7. And again, the big positive plus side to delta neutral is that regardless of which way this goes, you're not really exposed, right? And that's kind of the main thing I want to emphasize is when you're making these MLM pools and you set them up like this, okay? And I'm just giving a random example. I know the UIs on these things can look very, very different depending on you know, how you set them up. If you make something like this, you pretty much, the price pretty much has to go up, right? It's just, you're just basically taking a SOL long. There isn't really a point, if I'm being honest, of doing this, because you might as well just open a leverage position at that point, right? Even if you start to go here and here and here, you're kind of just counter shorting against yourself. And I don't know if it makes a ton of sense to do this, at least in my opinion, right? So as I adjust the leverage, right, this is going to change these prices over here. And the more USDC I have, right, obviously I can't get liquidated to the upside, but I can get liquidated to the downside, right? And as I borrow more and more SOL, I can get liquidated much lower, right? But I will get liquidated up here much faster. So my general suggestion is you can use whatever collateral you want, right? I can just use stable coins here. I do not have to use really anything else. And I'm going to make a pool of JLP, right? And people often ask me, why would I do a pool of JLP? Because the yields are typically lower. Let's kind of go look at the chart of JLP just to show you guys why. It's very, very simple why. Something like Solana, right? This is extremely volatile. I mean, this is kind of self-explanatory. Oh, also, can you guys see my screen, by the way? I forgot to check. Awesome. Cool. So, something like Solana, very, very volatile, right? If that pool was 250 to 270, we can already see that in here, there's already points where this pool is not trading in the last couple days, right? Or in this range here. For me to make a lot of APY on this, my range has to be like 230 to 270, right? And that's a really big range. We know that that's not very profitable. So you have to kind of choose, right? If I run a super, super tight pool between 260 and 265, I'll make a ton of APY for as long as that this thing can stay in this range, right? But the minute it goes outside of that, I'm going to stop earning those fees. So my suggestion, guys, and this is something I'd actually write down. One of the few important points I'd say is on weekends, use these pools. This is the best time to use them, is pick low volatility days because you know the price probably won't do very much, okay? So if I was going to look for a day to probably set up a very, very tight pool, it's going to be on a Saturday or a Friday night or a Sunday, and I would look to run it into the weekend because, again, if I go to, let's go sort these out. And this is actually a really good way to make money, I'll be honest. I didn't really think of this until pretty recently, but this is awesome. For the most part, right, if you can find a nice weekend, which is most weekends, again, this is an exception, right, this whole Trump pump here. But let's say we get a weekend like this. This is amazing, right? 10-point range here. You run this for 3 or 4 days. This will return you like 30%. And it's not that risky because if it goes outside of the range, you don't lose money. You just stop making money. So I know a lot of people have been using these pools and like kind of blindly going at it. There are really smart and safe ways to do these things where you don't take on that much risk. Again, with something like this, you could make your range, let's say, you know, here to here for a hypothetical. And then, yes, you'll lose money from this midpoint to this point here when it finally does drop out, but you will make a ton more money in this stretch here, and then this will just stop trading, right? Until, you're back inside of here, right? You make money here, and then it stops working once you get above there. But the amount of time that you spent in here was so much greater than the time that you spent inside and outside that you are very, very likely to make a lot of money. Now, again, the obvious limiting factor here is that if you have a ton of volatility like this, your pool becomes immediately useless, right? And this is kind of where I'm going with the management is not a bad thing type of thing, where I was talking about the neutral trade vaults. I don't want to have to go every day and log in and check the price and adjust my price range, right? I'm happy to pay at least some of my money to another service like Neutral to automatically adjust these ranges every day and make sure that the price is falling between them. I do not have the human capacity or capital to do this 24/7. I'm guessing that you don't want to do it either, and the easiest way to not do that is to put a larger chunk of money into a managed pool that will take on lower risk, again, by being delta neutral. Sure, you don't have to make a delta neutral pool. There's a reason why all the management services do, though, and it is because of the fact that it is much, much, much less risky. Now, again, the rest of the time, you could also just do something like this, right? If you want a pool that will run all the time, right, I could theoretically make a pool that trades in a range that's as big as this, right? 170 to 200, let's say. Just understand that every day that I run that pool, I am making way less because that range is so much larger. All right. Gonna take a quick pause. Oh, sorry. And now we'll go to something like JLP. Again, this will generate less APY because there's less fees, but comparatively, this thing is much less volatile. And unlike kind of Sol, I would feel much more comfortable putting a directional bias to the upside on something like this because of the fact it's comprised of fees and not just a pure token. I would imagine that at the very least, it just kind of chops around. Doesn't go to zero because, again, it's mostly based on cash as opposed to pure crypto. So that's a very important distinction to make. And again, you could, again, make a very, very tight range. So I'll show you guys some example pools that I have running now in a minute. But again, you could make a super tight range of something like this, 4.86 to 4.89. And the whole time the price, right, trades in here, you'd be making a lot of money. And when it leaves, you'd be making a lot less money. Or, right, again, a much more active but lower yield pool would be this, right? A much bigger range. Now, the basic question people usually ask is why is the bigger range less APY? And the answer is, if you think of it like a dodgeball game, guys, which is probably the best way to think about it, in my opinion, or like a tug-of-war game, if this is our midpoint here, we score a point, right? We'll use sports terms for my sanity's sake. Every time that the price goes here to here and here is a point, right? You made money here, you made money here. I'll just get rid of the circle because it's kind of stupid. You made money here, right? And you made money here. Now it takes a long time for this to happen, right? As this price range is bigger, because as the price is going lower, you are scaling in all the way down. You are selling up here, and then you are shorting up here. That's a big, big range. Now if we do the exact same thing with a much, much smaller range like this, right? And I'm sorry for the bad artwork quality, guys. I just don't have that much technical skill at this. If we did something like this, well, it's only logical to assume the price would hit this middle point a lot more. You would score more points, and then you'd get more APY. Okay, moment here for questions, because that was a lot of information. How are we feeling about these pools? Do we kind of understand how they work? And I don't know. So, tell me what you guys think. Awesome. I spent a full week. I think a GSHM sent me the screenshots of Trump pool, right? I think, yeah, it was a GSHM who sent me the Trump pool thing. And then after that, I gave it a full little deep dive because I was already using the neutral trade stuff for a while. And and then I kind of shifted into my own vaults after Ajisham showed me him making like 10% in 12 hours, because I thought that was pretty cool. Oh yes, sorry, gonna go back to my actual. I can get out of TradingView now. I think I don't think there's too much point of going through TradingView, but the basic premise here with JLP is that you can set a directional bias a little bit because you know it's going to go up, and you have a much less volatile range, right? 4.5 to 4.9, as opposed to Solana, which is going to, be super, super jumpy, to say the least. Oh, good to see you, Divinity of Squirrel Capital. You did miss the bulk of the explanation of how the pools actually work, but I am recording it, and I did check it is recording properly. So we are good on that front. Okay, I'm gonna just go back to sharing my browser screen over here. Awesome. And I'll show you guys two pools that I made roughly an hour ago that are very, very, very similar in what they are doing and kind of the drawbacks with both. So let's go to this Solana USD pool over here. Well, we see this range is extremely small, right? Extremely small range of about 261 to 267 with a yield every 24 hours of 14%. So we're going to do a little practice question. What do people think is the drawback? I would say at least, honestly, Samurai, $100 is good. Let's say I'm going to take $100 as my minimum because you can probably make 5 to 6% a day on the right days to be doing this. So again, want to emphasize this again for the guys who just came here. Weekends are going to be the best time to run these pools because you don't have a lot of volatility, right? If I make this same pool on the weekend, right, with this right now, 261 to 267, this is an extremely quote risky pool, right? And I don't mean risky in the sense that I'll lose money. I won't lose money because this is neutral, right? I have an equal amount of SOL to borrowed SOL, right? Exactly neutral. So I don't lose money on the price exactly. It's very easy to get stopped out in this range. So my risk here isn't that I lose money. My risk here is that the pool simply stops running, right? Because of exactly what Ajisham just said. This is an extremely tight range, right? And again, this is mostly as an example, just to show you guys kind of how they all work. But yeah, my range on something like this is like this, right? When I started my pool. I started running my pool for context over here. So that was my midpoint region, right? And again, the basic idea with a pool like this would be that it does this. Now, like I said, this is very likely to get stopped out, like Ajisha mentioned, because the range is so small. The best time to run something like this, like I mentioned, would be the weekend. Because, again, if, let's say in a hypothetical scenario, this does stay in my range for 24 hours, I would make 6%. Or sorry, 12%, right? This is a very easy 12%, assuming the price stays in my range. So the time to run this, again, this is actually a good day. It's Friday, guys. So this is a great time to probably start doing this. I might want to widen this pool a bit. Put my thing down here, for instance, at like 258. But on a weekend especially, I'll put that indicator up again. It's just I just searched weekend. It's not mine, but I can make one if you guys want. All I'm doing is sorting out the weekends by themselves. And again, Trump weekend, so exception for the most part. But these really, really, really unvolatile weekends, you guys can look. It's like a 5-point range here, right? Again, very, very small range, 10-point range. You could make 26% in 2 days if the price stays in something like this. And again, on a weekend, much more likely, right? This is our whole week. We're just going straight down, right? And then the weekend we do stop, and that's where you can actually make money. And again, you wouldn't be losing money if the thing is outside of the range of your pool. You just wouldn't be making any money either. So serious opportunities to run these things when you can narrow a super tight range. Now the rest of the time when you can't run a tight range, again, I'll go back to that site and kind of show you guys how that APY adjusts as we move the values in our pool. So hopefully you guys can see this. So this is, I don't know if I can actually, I'll have to make a fresh one. Oh, cool, we can do it together. So if we go to this pool right here, let's go copy my exact settings. So let's go put some money into this, right? Well, I will add some leverage, and leverage is just going to affect our liquidation prices. No, we're talking in a single day. Like, this is not annualized. So I'll get into that, Slobber Monkey. If the numbers I'm giving you are not annualized, right? You guys can see yield 24 hours. I believe at least this is not annualized. I could be wrong. It should be, as far as I know, this should be annualized. Sorry, should not be annualized, but again, we'd have to find out. Yeah, that's what I thought as well. It should be daily, right? And again, this should not replace keeping money in spot, keeping money in trading. There are inherent risks to this. You still can get liquidated. It's just very unlikely. But right, yes. So let's take our pool, right? Again, as we spread this out, guys, I was pointing this out earlier, you are going to drop the total yield significantly, right? That was useless. Let's not do that. Let's say 250 to 270. Well, this is now only going to yield 8% as opposed to when it would yield something like this. Now, if we go back to here, right, 270, as I increase my leverage, right, I'm going to increase my yield as well. And I actually don't feel your risk with this is too high, right? And at least with a delta neutral setup like this. So let me just make this a bit more neutral. Right? Why do I think this is not that risky? Because, oh, fuck, I fucked it up again. And we'll make this one together. So you guys can copy this pool with me if you want. You don't have to, obviously. Just want to show it as a proof of concept that I actually do what I say. So again, we could do Sol. I picked Sol because it's more volatile. But again, my long-term one, so that's a good question that Slobber Monkey asked. I would want to use JLP. And the reason why I'd want to use JLP is even though it's going to get me much less yield, and it will get you much less yield. So let's just go crank this up. And again, the leverage on this doesn't worry me because your liquidation price is just so far. I don't really see it happening with this kind of leverage. But again, keep in mind that it is a possibility. You don't want to go insanely heavy on these things for that reason. You can see that my range here is very, very small, and my yield is also very, very small. And the reason that this yield is much less is because this asset, number one, is trading much less, right? So less and less people are trading this, and that would explain why the yield is generally much lower. And also, biggest aspect of that as well is there's also much less volatility on this, so the amount of times the price is crossing over from point A to point B is much lower, right? But let's say I want to expand this out to be something like this, 4.625 JLP per yield. This is 1% a day, so inside ranging. Yeah, but like the way you would have to get like Mika, the thing is for you to get liquidated, right? You'd have to take a position inside the range and then get effectively liquidated in one candle, if that makes sense. Like you have to get liquidated all at once. It's not so much like once it leaves the range, it'll just stop trading. Yeah, so this statement you wrote here is pretty much accurate. You would lose money on the trade that took you outside of the range, but you wouldn't lose money continuously after that. So something like this, to me, again, is another really good option for something I would want to run long term. Let's say I made a JLP pool from $4.50 to $5, right? I'm going to go back to share my trading view. Sorry, guys. I got lost. Share this window. Cool. So let's say I go back to my JLP thing over here. Keep in mind that our daily estimated yield is roughly 1%. And guys, to me, this is a really good option. And this is why I've only been really using the JLP pools. I think it's pretty clear kind of why now. But you have way less volatility, so I can pretty confidently make a range like this, right? Maybe I want to make it a little bit, higher up here. Whatever, kind of up to me here. But if I make a range like this, I can probably leave this without much maintenance running pretty often. And I think we can kind of all agree on why that would make sense, right? Yeah, I don't know. That wick is, I wouldn't worry about wicks on this thing because it's JLP. It's not really traded on real exchanges. But yeah, again, the basic premise is the same. This is a much more stable kind of pool, right? As opposed to the Solana one where I'm trying to pick like a range of like that, right? So I would feel pretty comfortable leaving this running weekends or weekdays or whatever to answer Slobber Monkey's question. and I would just understand that I'm making 10 to 12x times less money per day than as I would if I was doing something like Solana. And again, this does not matter what coin you trade on. So if you're trading Trump, if you're trading any of these, huge shout out to Ajisham. He's the one who got me to look at all this stuff properly and dive into it. So cannot thank him enough. But yeah, again, critical points to stress. Keep it delta neutral. You don't want to pick direction because then you're just basically trading. I don't see a reason to do that unless it's JLP, where you're pretty much permanently bullish, in my opinion. But yeah, for the most part, delta neutral is your way to go. You may be sacrificing some gains, but for the most part, you are taking on infinitely less risk. So let's go back to our main screen. Oh, sorry. You'd have to effectively get liquidated in one candle, Jotram. Like, that's kind of like the basic answer. Is that, especially on something like JLP, you'd have to get, like, insta-liquidated. And that's why I keep saying, I keep my leverage probably here. Like, if you look at the pools I made, nice, this one's already useless. So again, you can see I haven't lost money. This thing has just stopped working, right? I'm still up $7, but this is not actually trading anything. So that is a good example. Actually, good to see that this happened live. Oh, I can go. Sorry about that, guys. All right. Yeah, technically the last trade could possibly do it. Again, your likelihood of this happening is very low, and I wouldn't necessarily worry about it too much, but it is always a possibility. Now, someone asked a very interesting question of, I forget exactly what it was. I'm blanking. Right. What are the fees involved with making a pool? Seems into the pool. It doesn't matter, Ajisham, because it's delta neutral, right? So even if you're wrong with the range you set up, you won't lose money because you're not picking direction. So as long as you make this value 0.05 up here, not there. Sorry about that. Also, my PC is crazy lagging. If you guys can't tell, so I am doing my best to load everything. But as long as you make this value delta neutral, you don't lose money on price direction. So I wouldn't worry about it. My honest answer is I wouldn't worry about it. It doesn't matter too much. Now, you guys should be able to see my screen again. You could do that. Yes, nothing is stopping you from doing that at all. Again, when you do this, you're getting the tokens back, right? So I'm not in a trade. I'm now just holding 7.5 SOL because I'm guessing the price has gone down. So this is your risk here, is that you will end up holding the tokens if it goes too low, and you'll end up holding the cash if it goes too high, right? So in this scenario, I am losing money because I'm holding 7.5 Solana, not because I'm losing money in the actual pool itself. And again, the way you avoid this would just be setting this number to be higher. And again, you guys can see that I am out of range of this pool here, but I am not actually losing money. I'm still up $7. It's just not doing anything, right? Versus this thing, which is still going. But again, and fees for creating the pool. They actually were pretty high. So I put 1997 into this pool. I've lost money because Solana has gone down as well, but I think I paid at least $5 in fees right off the bat. And that might be, again, dependent on how much capital I'm putting in. I'm not 100% sure. I think the fee does somewhat scale. And again, with this one, I believe I put in roughly $5,000, and I paid a $12 fee on this. But again, part of that is just the actual price movement of JLP. So I'm going to create a pool with you guys for the weekend together. I encourage you guys to copy it if you so choose. And I'm just going to set it up the way I think makes sense. And we'll see how it performs on the weekend. So I want to make this, again, like I've been saying 25 times, delta neutral, delta neutral, delta neutral, delta neutral, delta neutral. I don't really want to use 5x leverage because my liquidation price is pretty close, right? If I do this, I can see that I can get liquidated to either side. So I'll probably just keep it around here, right? 3 to 5x, let's say. Now, I'm going to make this between 250 and 270 because, we'll make it a bit bigger, right? Even though it's a weekend. Let's say 250, 250 to 272, or whatever, 249 to 272, right? And my yield's gonna be roughly 5% on something like this, which is pretty good. Yeah, no worries, Mika. You guys can bounce out as you guys need. There's no worries at all, right? I'm gonna slowly move this slider until I delta neutral myself, right? Which still leaves me at 5.77% yield. And again, I have a pretty decent range here of roughly 10 points. But again, what I can do is I can continually, slowly drop this off, right, if I want to increase that yield or increase the range. So again, the only real risk you run is all your money will be converted back into the asset if it goes too low. Okay, so if the price goes too high, you will just get your cash back, and that's not a risk at all. Now, if you're doing a pool like this, right, if it goes below this range low over here, I'm going to only get my money back in Solana. That is the risk with this one, okay? Again, understand that, let's say the market nukes one day, right, and Solana goes to 220, I'm not so much worried about getting liquidated. I'm more so worried about getting stuck holding a bag of a coin that I didn't want to hold. And that's kind of why I say use lower risk, is you don't want to accidentally buy $10,000 of Sol if you decide to put all your money into pools, right? Same with Trump. And this is the risk I was trying to stress to Ajisham, I think, early on, is if I have $10,000 in a Trump pool and Trump nukes, all my money will get converted back to Trump, and then it will keep falling with the price of Trump. So the risk isn't getting liquidated, the risk is the asset going to zero with me holding it, right? So, again, let's go make that pool we were talking about. Sorry, guys, I got sidetracked. We can do the JLP one. Well, I'll let you guys vote. What do you guys want to do? Pick a coin, Sol or JLP, or whatever else is here. All right, we'll do JLP. Actually, I'm going to say I don't want to do JLP for this because I don't think it's worth it for this kind of thing with this range. So if I do this, I'm only going to make 0.1% a day. I'd rather show you guys the Sol Pool one for the weekend. I think you'll just make more money. Honestly, like in the interest of making you guys money, I'd rather show you guys a pool like this. That makes more sense. Especially that we are going into the weekend, I do think it's a good time to do it. So, again, I'm going to move my leverage up to something like this. It is, again, the weekend, so I don't really expect it to come anywhere close to my liquidation price whatsoever. But always in the interest of safety, don't over-leverage yourself, right? So for me to get liquidated here, Sol has to go up to 330 overnight in a single candle. I don't think it happens, but I don't want to find out. So we can even drop this even more. It doesn't really affect our yield all that much. Now, I'm going to do a 248 to 272, right? 5.6% yield. And this is my position size, right? So all of my USDC is going to be used to borrow an equal amount of USDC and Sol. Oh, I got to adjust this slightly to be more neutral. Come on. The other way that you can make these pools delta neutral is just by putting an equal amount of collateral on both sides, right? So instead of borrowing the assets, which you're going to pay fees to do, you could just put an equal amount of Sol and USDC. Okay, so I'm going to go and create this position, right? And we can see my leverage is 3, my liquidation prices are these, no limit orders, and my fee to do this is $2. Right, and I'll get this Sol back. So you are also paying a small fee in Sol to actually earn those funds. So I'm gonna click Start Farm. Oh, it stopped sharing. 1 second. I think the PC is struggling to handle this, to be honest. You guys can see the lag. Cool, but now that this position is opening, and again, I did pay, so if you guys look, that pool was supposed to be around $2,500, but I paid roughly $8 or $9 in fees. So if you're going to do this, again, you don't want to do a crazy short-term, and sorry, just to clarify again, I think the fee scales with how much money you put in. So if you put in $100, you're not going to pay 8%, just to make that clear. I am doing big amounts, by the way, for the purpose of visualizing this to you in a couple days. Just to be 100% clear. So I want to show you guys how this actually turns out over the weekend. And that's why I'll take a screenshot of all these pools just so that we can all track them together as a server and kind of learn from it as a community. So I'll go screenshot those over here. And again, you guys can see my pool has been made. My liquidation prices are as follows. And again, my risk is quite low, right? With this one as well. I have no liquidation price down here, and I have like 500 up there. So Solana's not going to double overnight. I don't have to worry about this all that much. And again, I'm not using, again, I know this is a lot of money to just stick in a pool. I'm not trying to downplay that, but this has been roughly an hour, right? $7 an hour on $2,000 is not a bad return, especially for a thing that's this low risk. And this, again, this should be a way to supplement your existing investments, compound the profits back into spot, right? So if you look at this over here, I'm actually earning JLPs. I love JLPs. As you guys know, I am the biggest JLP maxi in the world. And what I'm going to do with these profits is put them back into my spot bag of JLP as opposed to trying to compound them. Now, again, I think most people realize this by now, but trading, you need to, like, people have to some degree trade to make money. If you are doing a super low capital investment, just in general, as I'm sure you guys know, it will take forever and ever to mature. It's just, the nature of how those things work. You have to kind of pair high risk bets and take the profits of those and put them into long-term growth. So this isn't necessarily the time I would say you don't trade. I think a lot of people in here have been struggling with trading recently as well, and that's okay. I noticed the server has been a bit quieter recently. That's all. That's, markets are cyclical. I think people struggling here makes a lot of sense. I've been struggling myself, as my lovely copy trade, AAVE trade, has proved. But there is tons of value in this. You need to have small bursts of short-term profit, park those into long-term gains, and then kind of keep compounding that over time. At least that's my strategy long-term, is once you pull something out of your trading account, it should never come back. You should put it into spot, and then wait till you get new money to use for short-term things again. Right? So let's say I have a trading account of $100, and I make $50. I'll take that $50 and put it into this. Let's say I then liquidate my full $100. I'm not going to take my $50 back. I'm going to simply wait till I get more money to then try to use for another short-term thing. I really would not be looking to take money out of my long-term investments to put back into short-term. Okay, what else? We talked about neutral trade, we talked about NX Finance, talked about Tuna, talked about Lulo, talked about Camino. Awesome. Okay, it's been about 55 minutes of me talking, so that's usually a good sign that we've covered a fair bit of stuff. Any questions about what we talked about so far with the pools, lending, anything at all, etc.? I will upload this all live to YouTube as well, by the way, so that people can enjoy it. If we limited funds. If I had limited funds, I would try to probably... It's tough. The answer is it doesn't matter, but if I was using low capital, I'd want to probably go for higher yield, just because it might not be worth it to make $1 a day, right, is kind of my logic here. So I might try to make a more tight pool and then use it on weekends. Assuming that you're moving the capital around, which is kind of what I think you're implying, I would use it on weekends, kind of capitalize when it's not volatile, right? Because you're not going to trade on the weekends, generally, what there's nothing to do. And then I would put that money, when you're done, back into your trading account. That would be my usual strategy with something like this. Again, I think the odds of this thing liquidating me are pretty low, but I don't need to test it, so that'd be my advice with that. It's hard to say, Joe Trum, because again, it's just a math calculation of how long you stay in the pool versus how long you're generating higher yield for, right? So even with lower yield, if you're trading longer over the long term, you will make more money than a higher yield strategy with a much tighter range. And I didn't see this response before, but yes, basically that. That is correct. And this is, again, much more risk. Yes. For specifically for creating the pools, I would do it on Tuna because they're not charging you a performance fee, which they shouldn't charge you anyway, because you're the one making the pool, and they're pretty safe. So I would go with that. Yeah. Yep, Tuna's excellent. I'm good. Oh, I think I sent you that one as well for lending, Zero. Yeah, that's my main. So again, the big difference between all these lending protocols is that Tuna is the only one to have lending on altcoins, right? So I mean, yes, you can lend your Sol for 2%, but don't do that. It's just not worth it. Lend it for 15% over here. It just makes a lot more sense, at least in my opinion. There's just no reason. It is very, very low liquidity, like we talked about, so you do have some inherent risk, right? These pools are much, much smaller, right? 5 million, 100,000, whatever. But again, for taking on that extra risk of being lower liquidity, 95 million versus 5 million, right? You are making 15 times the APY, which to me is, again, worth it. Especially with DeFi Tuna, as I've heard good things about the platform, and they do have significant backing from other venture groups. And hey, you can even lend your Trump. So if you hold Trump and you want to lose money, feel free to lend it out at 25%. I guess I stopped sharing my screen. I'll put that back. But yeah, you guys can see over here, Trump 25% on lending down here, right? And again, 15% on Sol over here with $5 million of supply, versus $95 million of supply, but only 2%, right? So this is kind of scaling 1-to-1. This is 7 times the liquidity and 7 times less APY. Well, this is 7 times less liquidity and 7 times more APY. So generally speaking, you want to find lower liquidity pools that are still safe to get maximum interest. Okay, I think I can stop sharing now. Yeah, so that was the bulk of what I wanted to cover today. Really just wanted to make it focused all about DeFi. There's a lot more that we could do on this topic. More DeFi utilities and stuff like that. I think this is a good spot to maybe take a break. If you guys are interested, we can do another event on DeFi, going over more protocols and stuff that you could look at to potentially make some extra money. But yeah, I think at least for one day, we've covered quite a bit. So I'm going to leave the floor open to you guys for any last minute questions. And I will post the recording on YouTube and then upload it to the server shortly afterwards. All right, so I'll give it a... Oh, hey, Joggy. Good to see you. You missed the whole event, but it's okay. I recorded it. I'm glad you enjoyed it, Jotrim. I do hope this is really useful for people. I'm going to put some bullet points here again. Honestly, Joggy, watch the recording. It's actually useful. Like, it's not an info session. Like, this actually has generally usable information. So yeah, guys, if there's no other questions, I will wrap this up. And I will post it on YouTube, and I will leave a short note of description of what we covered. I want to thank you guys again all for coming out.